फ्रेंड्स, टर्म कवर के साथ दो रिक्वायरमेंट साथ साथ चलती हैं. वन इज हाउ बिग अ कवर you need, knowing your dependents and their lifestyles. But another critical question which you need to answer is how long duration do you need that cover for? Often I've seen by default when a person ends up approaching relationship managers or sales agents of insurance companies, they end up procuring a term cover till age 80, 85, lifelong. And when I ask them this question, why have you taken such big long term cover? They say that the probability of death is higher in the later parts of the age. Hence, I was told that I should take a cover which is effective for this long duration because तब उसकी ज़्यादा ज़रूरत पड़ेगी and family वालों को कुछ मिल जाएगा. Now, if you see, this is where exactly the problem lies, where the concept of term cover is not very well understood, and I would encourage you to see our first videos in the series on what is term cover and how does it work. So in today's video we'll talk about how long do you need that term cover for, because अगर आपने ज़्यादा ड्यूरेशन का लंबा ले लिया unnecessary आप कॉस्ट पे कर रहे हैं. रिमेंबर, टर्म कवर इज अ कॉस्ट. अगर आपने बहुत छोटे ड्यूरेशन का ले लिया तो इसका इफेक्टिवनेस भी मीट नहीं होगी. सो we'll talk about this. Before that, a quick introduction. My name is CA Puneet Agarwal. I'm the founder of Banyan FA LLP, where we are one-stop shop for all finance needs of people. Please follow us on Instagram and YouTube, where we release weekly videos related to personal finance. So let's see the situations why you would take an optimal duration term cover. A person age 30 earning year on year, and if he continues to earn, he will build wealth. If the person does not build wealth and prematurely unfortunately dies, then the situation would require the dependents to be funded through a term cover which will fill in the gap. Now I'll share my screen and I'll show you how a 30-year-old person investing in an investment mutual fund scheme, an illustrative scheme which we have used even in our first series of videos, that how that wealth has compounded historically in the past, and how in the initial phases of life the wealth is compounding very slowly, and uske baad the wealth compounds really seriously, and that will give you some perspective of that should you take a long duration or an optimal duration cover. So let me share my screen and show you this thing. So here we have an example of a 30-year-old person since age 2000. मैंने year 2000 से example लिया है इस case में, and you will see that this is an investment value which he's putting in a mutual fund of 10,000 rupees per month. The exact scheme used over here is HDFC Flexi Cap, which has got a long duration of history. There's no investment advice here upon the investment scheme. It's just because it has a long duration of track record. That's why we've kept it. What you would see is that let's say the person's requirement was term cover requirement was 5 crores and he started investing gradually and उसने term cover अपना ले रखा है इस duration पे. So what you would effectively see is धीरे धीरे करके term cover उसका बढ़ता चला जा रहा है. This is the value of his investment. Sorry, उसके investments की value बढ़ती चली जा रही है. And till age 50, which is roughly 20 years into his investment duration, the amount of wealth which the person has accumulated is just about 50% of his wealth requirements. So term cover is quite effective over here. But the moment is touching around age 54, you would see that the term cover amount and the wealth has become equal. Now, if the person continues to invest, the compounding will keep on throwing bigger and bigger wealth. It will run into tens of crores in next decade. So effectively, जो 5 crore का आपने cover लिया था इस particular situation में, compared to wealth, it will be relatively a smaller part, and with every passing year, term cover की value का जो amount है वो wealth के comparison में छोटा होता चला जाएगा. So in this situation, what we kind of recommend to our clients tends to be that instead of taking a chota term cover, let's say 1, 2, 3 crores term cover for a long duration of time like 80, 85, look into your analysis of your wealth pattern and your requirement, and your crucial requirement for term cover is for the initial part of your wealth building. So in this example, what you would see that it is better to have a term cover till at least age 55, where your requirement value it will be matched with your investment value. So coming back here again, but this solution may not always fit everyone, because everyone's life is different. For most of the people, if you are on the disciplined path, life tends to work normally. So you do not perhaps need to take a term cover more than your earning life, which is roughly till age 60, right? But there might be circumstances where you have to take a longer duration term cover. What could be they? Example, midlife crisis, where families might be impacted due to separations or nasty divorces, where money might be available for retirement might be lesser. Huge business losses ho jaye somewhere during the journey, and to fund those losses you need to kind of again restart your life. Natural calamity might kind of uproot your assets which you have, so you might have to restart. Could be late marriages, late child arrivals, so you might have to think about the financial planning aspect, so you might want to kind of add more years into your term cover to cover that uncertainty. And also special need children, so in this situation, the families might need a little bit more support, financial support for their child's well-being in the future. So they might take extra amount of duration on the term cover just in case something happens to the family and their assets have not reached to that point. So those could be examples where term cover beyond 60 or 70 or 80 might be relevant, but you have to assess your investing life, your financial life, and see how long that term cover which you're taking is relevant for you. Not always the 80 or the 75 is the right answer. For most of the people, it may not be the right answer. Talk to your financial advisor to get more clarity upon your requirement and get the right level of term cover. Thank you.